Alrighty, so I'm going to give you guys another video on the market maker buy model, right? I already have a video on this topic, which I'll leave a link to that video in the video description. But I figured I'd make another video on it because it's an in-demand topic. I know a lot of you guys want more, you like videos on this and you want to learn a little bit more about it. So that's what we're going to cover here, right? So we're going to take this GBP USD from this morning and we're going to talk through it, right? So as I talked about in the last video that I made on this topic, what do we need to do first whenever we are talking about the market maker buy model? And it's the same deal with the market maker sell model. You'll just reverse what I say in this video and it's the same thing. All right, guys. So, but we're just going to use this example because I want to keep this video fairly short because I know, a lot of people's attention span isn't all there. Mine isn't either, right? That's what we're going to talk about. Okay. So we're just going to use GBP USD in this particular video. So very first thing that we need to do here is we need to identify a higher time frame point of interest. That's number one. Okay. Because we need something to base the trade off of. You don't want to just be trading any old bounce that you see in the marketplace. Like it needs a while to influence it to go in a particular direction, right? So we need a key level of support. We need a higher time frame point of interest. So on GBP USD this morning, what was that higher time frame point of interest? Well, we had higher time frame liquidity right here, which I will indicate for you. You can see the swing low right here. So that is higher time frame sell side liquidity. We understand that beneath swing low levels is sell side liquidity. This is on a 4-hour chart. So we're talking about a higher time frame point of interest that we're dealing with here. I didn't first thing first this morning, whenever I got down to my charts, that was the very first thing that I identified was that higher time frame point of interest. Okay, because that's what's going to base my trade off of, right? I need a level of support. Okay, I'm not just trading something because I just see some random bounce in price action. No, there needs to be a reasoning as to why price wants to head higher. I need that reasoning and that support. That's not point of interest. I need to see it test that. So that's what I saw first thing first in London session. I saw it come down and I saw it test that support. Okay, meaning it cleaned out this higher time frame sell side. Again, look right here, so nobody's lost. We have our lowest low in the middle where my cursor is moving. We have a higher low in the right. We have a higher low in the left. That makes that a swing low level. That is a higher time frame liquidity level that we took out right here in London session. And at the same time, we come down and we get the inbounce and all that good stuff below as well, right? So GBP USD, that's the very first thing that I do is I identify that level of support, okay? What you're going to do next is, after you got that level of support, what do you think you're going to do? You're going to identify that consolidation, okay? If you look to the left, it's very clear to see that consolidation up above. And that consolidation essentially just looks like back and forth price movement. So you can see right here, look how it's back and forth, back and forth, back and forth, back and forth, back and forth. That's that consolidation, okay? Which we're going to indicate right here. See that? That's what consolidation looks like. It's the same signature. So you go into your charts, it's the same exact signatures. That's what it looks like. It's just essentially back and forth price movement like that. That's what you're looking for. And again, remember, we've already identified, we have a higher time frame point of interest because you got to think, guys, in a market maker buy model, price is going to be doing what down to that point of interest? It's going to be selling off. It's going to be putting in new lows. Look, it's consistently trending lower, trending lower, trending lower, trending lower, trending lower, trending lower. It's consistently putting in lower highs. It's consistently making new lows all the way down into our higher time frame point of interest that we are framing our trade off of. See that? So we're testing this point of interest, which is where obviously we're going to be looking for what? Our smart money reversal. But beforehand, we identified our consolidation over here as well. See that? That was our consolidation right there. We identify that and you could actually take profits up into that consolidation right there. That's valid. That's something that you could look for. Okay. And you already knew it, like off the bat, you already know that this is your draw. This is your draw on liquidity right here. After you take out that low right there, and also we had, of course, the imbalance up above as well, right above this, which, further serves as that draw. But you have this consolidation, and as a lot of people use the market maker buy model where they'll take profits is above the consolidation, which is valid. So we've already established that you need to identify your higher time frame point of interest. We identified it. We've identified our consolidation, which is right here. That could be your profit target, the high of that consolidation. And now once we come down to that higher time frame level, what are we looking for next, guys? What is the next thing that I want to look for in here? Well, I want to look for that smart money reversal, which is essentially a shift in market structure off that higher time frame point of interest. Now, I called this play in my free Discord chat this morning. Okay, and if you're not in that free Discord chat, I'm going to leave a link to that in the video description. 100% free, doesn't cost you a dime to join that chat. Just go in the video description, click it, boom, you're in. And I post a free watch list in that chat room every single morning that the market is open. Okay, as well as you can go in there, ask me questions. I also provide tons of free educational material. It's a fantastic chat, right? And I posted this play in that chat beforehand. No hindsight, time stamped, everything beforehand. And what I did on this one, because after we came down and we tested a higher time frame point of interest. Okay, so remember, we got our consolidation over here. That's our draw on liquidity. This is our draw on liquidity over here. And you could target the high of that consolidation. Remember that. We've already identified the higher time frame point of interest, our level of support. And now we're looking for the smart money reversal, which is that shift in market structure. Now, what I did this morning was I went to the lower time frame chart, okay, on the 5-minute here, what you're willing to do, what you can do. So you can see right here, this is where I identified the shift, okay, and that was right here. See how we got that shift right here? So see how it came up, it cracked a short-term high down here. It cracked that little swing high in there, and it had the fair value at confirmation. It had the strong shift in market structure right here off of that higher time frame point of interest. This was the manipulation swing in London. We already had that little consolidation in Asian. Now we get the manipulation, aka the turtle soup in London, and then we get the displacement to the upside. That's price showing its hand. That's aka the smart money reversal, which is a part of the market maker buy model. Okay. And again, this is also where you'll get that ICT 2022 entry model, which is the fair value gap and all that good stuff, right? So there's your consolidation right there. Again, it's still there. You can see it very clearly on the 5-minute as well. So it's like back and forth, back and forth, back and forth. There it is. And then you actually got consolidation right here as well. So you could be conservative and target that as well. There's nothing wrong with that. And that's actually what I was doing this morning. That was my objective, was these highs up here. But you could be more aggressive if you wanted to, because you understand where the higher time frame, where the draw is, etc. So you could shoot for these highs if you wanted to be a little bit more aggressive with it. You could do that. Okay. And I mean, just look at the risk reward if you did, right? Because you can see right here, this is where we get our pullback right here. Okay. So again, let's rewind a bit because I want to make sure I don't lose anybody. And I want to make sure I'm explaining this in the simplest manner that I can, right? So this is our manipulation swing, all right? Because it's going to be a bearish trend in a market maker buy model. It's going to be a bearish trend down into your higher time frame point of interest. Once you come down and you get that sell off down to your higher time frame point of interest, which will be the manipulation move. Okay, that's where you want to see, because we can see in London session here. Here's your turtle soup. Here's your manipulation move down into taking out higher time frame liquidity, and now that higher time frame liquidity is where we are waiting. That's where we're waiting for that reaction. We're essentially just waiting for smart money to step in and tell us that they want to send this thing higher, right? ICT likes to use the analogy of a elephant jumping in a small kiddie pool, right? What happens when an elephant jumps in a small kiddie pool? That water is going everywhere, splashing everywhere. They can't hide. That's what it looks like on the price chart. It looks like that with the displacement, and that's all you're looking for. That's where that smart money reversal is. You're going to identify your higher time frame point of interest, and then that smart money reversal is going to be that lower time frame shift in market structure off of that higher time frame point of interest. Okay, and we've already identified the consolidation, which can be your profit target. Again, look at this back and forth, back and forth, back and forth. That is your profit target. Above that consolidation is where you can target. Now, I'm not saying you got to do that. I'm not trying to force you into a mode. You could just be conservative with your profit targets, take low hanging objectives like I like, and just be content with that. Or, I mean, if you want really good risk reward, you want phenomenal risk reward, then you can target that. What comes with that is more losses as well, right? But that's a way you can go about doing it. Targeting that consolidation, and that's how you do it. So this was the move. This was the shift in market structure, aka our smart money reversal. Now we get a pullback right here. What's this? What's this right here? That's your low risk buy. That pullback right there is what you call a low risk buy. And this is also the ICT 2022 right there. So see that? Comes down into a discount marketplace, aka below 50% equilibrium by that price range. Rebalances a large portion of that price action, finds support, ramps up, boom, has that ramp up, and then we get a little pullback right here. What do we see? Accumulation, See that? And then another pullback a little bit later, reaccumulation, and then it pulls up, and it actually took up the high right here, but that is the model in play. Okay. So it actually gave you another opportunity right here, because again, this was that accumulation that was taking place in here. See how it came down, and then where did it find support? As I posted this in chat too. Now, of course, there was the 8:30 news, so really that's not something that you want to be taking a part of. But we had this old high support down here. That's where it came down, and it found support off this old high support right here, which was that previous consolidation high. All right, the ceiling becomes the floor, right? That's what happens. And then this is where we saw that accumulation happen. And then you get the news, which, engineers that stop run, aka your turtle soup, takes out the low. And then after the news was done with, of course, I was looking for another push up. It gave the push up, all called in chat, again in my free Discord chat, called all this, called all that right there, that push up right there, right? And yep, that is the market maker buy model, just a perfect representation of it in play. And think about it, guys. Think about if you got in on this. Let's just imagine that you play the ICT 2022 entry model, right? And where's the discount on this thing at? Draw your Fibonacci from the high to the low, boom, find 50%. And I'm just showing you what's the potential here, okay? Say you got in at a discount marketplace. Say you targeted that low right there. And let's say you did target the high of that consolidation, which, may I remind you, is valid. It's a bit more aggressive than I like, but it is a valid profit target. And it is something that you can shoot for. It is indeed valid. And you will get setups like this repeatedly. Look at that. Over 4-to-1 risk reward on that play. Over 4-to-1 risk reward ratio. Actually, let's be a little bit more realistic though, because there was news at 8:30, right? So let's just say you bailed before the news, okay? Because if you're smart, that's how you want to do it. Let's say you bailed right before. That's over 2-to-1. Still solid. You can absolutely clean up with a 50% win rate, a freaking coin toss, right? With a 2-to-1 risk reward ratio. Or if you bailed up right up in here, you're looking at a 3-to-1 in that area. So it's still phenomenal risk reward on the play. And that's what you get with the market maker buy model. Whenever you identify it, again, that's the process. You need the higher time frame point of interest, okay? So identify that point of interest. And then price is going to be selling off into that point of interest, okay? Because it's going to be operating in a downtrend all the way down to that level, okay? And then it's going to come down. You're going to look for that. Again, remember, time matters. All this stuff matters. I'm not going to get too deep into all that into this lesson. As I said, I want to keep this video fairly short, and I think it's already gotten pretty long. And then you want to look for manipulation down into your higher time frame point of interest, okay? AKA your turtle soup, right? And then off that higher time frame, and then after you identify that and all that good stuff, you're going to look for the consolidation to the left of your chart. We identified our consolidation right here. We understand that there is buy stops above that consolidation because it is resistance. We can anticipate there are willing buy stops right here above that level. You can target that. That's your liquidity. So, and then off the higher time frame point of interest, what are we looking for? We're looking for that smart money reversal, aka that shift in market structure. We're looking for smart money to come in and tell us that they actually want to respect this level. We ain't predicting shit. We're letting smart money tell us that they actually want to send this thing higher, that there's institutional sponsorship behind running these stops up above. We're letting them step in. And how does smart money tell us that they're ready to send this thing higher? It's displayed with a shift in market structure. That's simple. It's a shift in market structure. You look for that displacement. You look for that fair value gap confirmation off of that higher time frame point of interest. Okay. And then right here is your low risk buy. It comes down into a discount marketplace. It rebounds a large portion of that price action and boom, ramps up, has an expansion higher. And then we get accumulation right here. And then it continues higher to take out those buy stops up above, right? And then it has another pullback, and now it's starting to trend up higher once more, but you get the deal. So, yep, that is the market maker buy model in play. Perfect example of it. And again, one last time before I end the video, if you want to join my free Discord chat, 100% free. There's no cash. Doesn't cost you anything to join that chat. There's going to be a link to that in the video description. I post a free watch list in there every single morning that the market is open. Okay. #1 chat in the world. No debate, no competition, right? So make sure you get in there. And also, I keep all my YouTube playlist, all that organized in specific sections. So it's just a really good learning environment, really good. Lots of educational material in there, lots of traders that you connect with in there. So I highly recommend you join that, right? But But yep, I think that about covers today's video. Hope you enjoyed. If you did, leave a like, subscribe to the channel. I'll catch you later.